Hello, traders. It is Sunday, March 15th, and the market is closed and everything is nice and calm. What a wild week. I thought I would do a little bit of a recap. I know there's a lot of nervousness. Only some of it is due to the financial markets. A lot of it is due to the coronavirus and how it might impact all of our health and what economic impact it might also have. So let's take a look at the market first, see what the technicals are telling us. You can see here that we've got the 200-week moving average climbing up, almost mirroring this upward sloping trend line here. We broke through it Friday and we rallied strong back above it. Let's go into that monthly chart first. Might as well start with the widest viewpoint first and then work our way in. Here we've got an interesting upward sloping trend line. If I connect this low here with this low here, you can see that it comes in right around that 245 level. A little bit higher than that, actually. It's probably around the 265 level. And let's take a look at that weekly chart, see where we finished. Here you can see that the close of the day was at 269.32, so just above that longer term upward sloping trend line. What might the market possibly do? We've got a couple of support levels that we can see on the SPY weekly chart. You can see here the 100-week moving average, and we found support there almost twice before falling through it dramatically last week. And man, did we fall through it in a very big way. We had one of the biggest down days ever. The biggest down day in my 30-year career. It was pretty scary on Thursday and Friday. We went back down and tested those lows again. So we will take a look at those daily charts and even the 5-minute chart. So we see that we've got the 200-week moving average coming in here around the 265 level, which also is that upward sloping trend line on the monthly chart. I really feel that that 265 level is going to be a magnet for a while. I also feel that we are not done with the selling. We are going to see some additional selling. So we might pause at the 245 level, which was the low from Friday, and we might also test the 235 level before all is said and done. That would be a major horizontal support level, and that was a low formed on December 24th, 2018 during that week. So let's go into the daily chart, see what we've got working here. Wow, that's the nasty fall that we've had. You can see the massive, massive volume. Very, very steep market decline. When you get a market decline of this magnitude, we're down about 25% on Friday from the all-time high. That's a good sized correction. When you have a move like that, this is not going to be a V bottom. This is going to take some time to resolve. We're going to see multiple tests of that support, and we've got a lot of news that has to play out yet. We have to see if this social distancing is going to suppress the spread of the coronavirus. Hopefully, it will. That's what scientists are telling us is the most effective course of action right now, but that comes with some economic repercussions as well. You're seeing a lot of people. I went shopping this weekend, a lot of empty shelves. People are stocking up. Not so much because they're afraid that they're going to get the coronavirus and they don't want to go back out into the crowds and contract it. It's more a matter of if I happen to get coronavirus and I'm self quarantined in my house, I won't be able to go out and shop, so I better have enough food at home. I didn't see anybody panicking. Everybody was nice and calm. They were stocking up on food items that would last them for a few weeks, and that's a prudent thing to do. Right now, if we can suppress the coronavirus over the course of the next 2 or 3 weeks, scientists believe that we have a chance for it to actually start to subside during the summer months. That will give us critical time to develop a vaccine. From what I'm hearing, a vaccine might be 6 months away, best case scenario. But right now, the effort is to make sure that the hospitals are not flooded with patients because they simply would not be able to handle everyone, and then the virus would have a chance of really spreading like it has in Italy. So, right now, everybody's doing the right thing. It's going to have a lot of economic repercussions. We're going to start seeing that over the course of the next 2, 3, 4 weeks. We've got earnings season coming up in April. Companies are going to provide what guidance they can, but they've been struck immediately by all of this. The travel bans, the amusement parks shutting down, people aren't going to movie theaters, the festivals have been stopped. So this is slamming on the brakes like we have never seen before. So let's take a look at the price action and see if there are any clues in here in terms of what we might expect for Monday. You can see how the market came down. It rested around that 200-day moving average, tried to pop above it briefly, and then the selling started immediately. Now, I want you to pay particular attention to this candle right here. We had a very big gap down. The market tried to rally through the course of the day and it closed on its low. This is an inverted hammer. The next day, we had the market opening right here and it sold off and it tested that low from the prior day. And it rallied all day, closing on the high. Now, this is a very, very bullish sign. Ideally, I would like to see this bullish hammer without this bar next to it. I'd like to see it out on an island all by itself and then have this bullish hammer, and then we rally above it. So then the trading continues, and look at the action on Thursday. You can see how the market sold off dramatically and closed near its low. Then Friday, we had a market that opened right in here, tested that low, rallied all day, and we got another one of these bullish hammers, which would typically be a decent sign to enter the trade. However, once bitten, twice shy, we saw exactly that same pattern here, which was followed by more heavy selling. Now we're going to go into the 5-minute chart and take a look at that. And you can see that most of the day, the market did not do a whole lot. We had a little bit of a breakdown right here. Market tested that low from Thursday, was able to hold. It rallied up a little bit. But here, with 2 hours left to go in the market, there really wasn't anything to tell us which way the market was going to go. We were coming into a weekend. There's been selling on Fridays typically. We could have just as easily at this point sold off down to the low of the week and stayed there, but we didn't. President Trump had a well timed press conference, well timed from a bullish standpoint, because he rolled out a lot of different policies that they're going to be enacting. He had CEOs from many companies like Quest Diagnostics, Google, Walmart, all talking about the different ways that they were going to help everyone contain the spread of the coronavirus. Also, lots of stimulus being discussed in terms of what the government plans to do to keep our economy on its feet and to provide bridge loans while we take this hit during the course of the next month and a half. And so you can see these long green candles closing on their high. Well, by the time all was said and done, you can see that the SPY closed around 270. If we go into the 15-minute chart, you'll see that the losses from the previous day were almost erased. So that's the gap down on Thursday. That's the close on Thursday. Here's the open Friday. We test that low again. We rally hard and we fill in this gap from Thursday. So basically, Thursday and Friday were a wash. And so now we can look at that and see if there's any other technical support. And you can see how this level right in here actually was the previous support. And we had bounced and tested that 3 times. So you've got 1, 2, 3 right in there, almost 4. So this is a nice horizontal support level right around that 270 level. Does this mean that this is it? We've seen the end of the selling? Oh no, I don't think that at all. In fact, I think that there's plenty of bad news coming. There are going to be more coronavirus cases that we find out about come Monday morning. We've also got the spread of coronavirus globally, new countries. You're going to have more and more travel bans. I think that this is just a reprieve. This was a nice short covering rally on Friday, and I think that shorts know that they have to tread cautiously in here, that the government's going to pull out all the stops. Central banks are going to do what they can. Now, central banks are painted into a corner. Most of them are already at zero interest rate policy. The US is heading there very, very quickly. So that's not going to do a whole lot, but there were a lot of repos. There's $1.5 trillion worth of liquidity injected into the financial system. That is going to help us avoid a short-term credit crunch. Much more needs to be done. So we still haven't seen all that aftermath. Do we come in Monday morning and buy? I don't think so. If we get another pullback to these lows, and we'll take a look at the daily chart now, if we come back to that 245 level that we saw last week, I think that there might be some opportunities on a very short-term basis to sell some out of the money bullish put spreads, but you've got to go way out and you have to wait for that market to drop so that you can give yourself extra long distance from the strike price, and you have to sell time premium that'll expire in a week or two and hope that the market just stabilizes, not rallies, just stabilizes for a day or two or three so that that time decay can start to work in your favor. That's about as good a trade as you'll be able to do at this level. Would I buy puts? Heck no. Would I buy calls? Heck no. They are so juiced. There's so much option premium in them. I did a video last Wednesday and I highlighted 4 stocks and I talked about how the options pricing is absolutely crazy. Microsoft used to trade in penny increments before the coronavirus crash. Now I'm seeing options trade 50 cents bid offered at $1.50 on Microsoft. It's crazy. And I could go right down the list, Apple, you name it. The stocks with the most liquid options, mile wide bid ask spread. You can't even touch them. So I think that some of the sectors that have been nailed really, really hard might finally start to find a little bit of support, but overall, I would say you've got to tread very cautiously. You have to be super selective in your stocks. You have to look at companies that don't have a lot of exposure to supply issues in China because those are going to start creeping in. You want to find companies with very strong balance sheets where they've got a lot of cash on hand. I prefer to look for companies that have more cash per share than debt per share. You want to take a look at companies that are not vulnerable to consumers shutting off their behavior right now. And so I like a lot of the social media stocks. And tonight we'll take a look at how the futures open up. I'll do a quick video. The stocks that I highlighted last week were ATVI, and I think that's the type of stock that can hold up well. I like that 200-day moving average holding in here last week around that 53.50 level. Are people going to be gaming less if they're quarantined? Probably not. They're probably going to be gaming at least as much as they did before. This stock's got a really, really strong balance sheet. So this would be the type of stock that I'd be looking at. I'm going to go into the stock ER. So you can see on Activision, they have cash per share of $7.62. They have debt per share of $3.84. No supply issues from China. I think that a lot of their programmers can probably work at home for the next month or so, so the company should not be negatively impacted that way. Yeah, this is the kind of company that I would be looking for. They've got enough cash to meet their payroll and some of their short term obligations while all of this settles down. And on these, I think that you can go out of the money, take advantage of those inflated premiums, and sell those bullish put spreads below technical support. So there's a trading idea for you. I think the same type of principle applies for Microsoft. I think the same thing applies for Google. Perhaps the same thing applies for a company like Facebook. So I'm going to be revisiting those 4 stocks that I had in my swing trading video last week, and I'll take a look at them tonight when I look at the futures. But I suspect that we're going to be seeing more selling because the warm fuzzy that we got from President Trump on Friday is enough to get the market to rally off of its lows, but I do not believe that it's going to have a sustained impact. Investors are still going to err on the side of caution. They're going to sell, they're going to go to cash, reduce risk right now because nobody knows if this is going to turn into a financial crisis, if there are going to be a lot of industries and companies that go belly up because of this. Really hard when you turn the spigot off immediately. We have not seen this. I haven't seen it in my 30 years where it's been this abrupt. So when you have conditions like that and you have unknowns, the best thing that you can do is nothing. Stay in cash. Let the dust settle. Wait for clarity. Then you can act with confidence and know exactly what your course of action should be. So, yes, I'm interested in selling some out of the money bullish put spreads. I think that we've come in so hard and so fast that over the course of the next 2 or 3 weeks, I think as people start to see corona cases around them, where the people actually got healthy and fought off the coronavirus, they'll get a little bit more used to what this virus is, and there won't be quite the panic that we've seen over the course of the last 3 weeks. So I hope this helps to give you some perspective on everything that's going on. And you can look for a short video tonight where maybe I'll highlight a couple of stocks. I want to see how the futures are. Quite honestly, in order for me to sell a bullish put spread, I almost have to see the futures down tonight. And I've got to see them down pretty substantially because unless we really come in hard tomorrow and try and test that 245 level on the SPY, I'm not going to be overly anxious to sell any bullish put spreads, certainly not on a bounce tomorrow. Oh, heck no, because I know that those gains can be stripped away almost instantly. Again, play it safe. Stay in cash. Any trades that you do right now, you got to keep them really, really small. This is not a time when you spread your wings and you make huge money. Those gains, if you were short the market, have already been made. Now we get into a transitionary period that's going to take time. So we have to be super patient. If you like the content of the video, please give it a thumbs up. Make sure you subscribe to this YouTube channel and turn on your notifications so that you always get these videos. Promise you, they'll always have at least a few trade ideas in them and lots of education. Thank you. Good luck.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.